Few vocal test subjects have voiced their lofty expectations for the manufacturer, claiming that by 2030, Tesla will provide a return that is at least 10 times higher than its present stock price. According to a list of the 30 most popular stocks among hedge funds, Tesla is rated 26th. Tesla was included in 91 hedge fund portfolios at the end of fourth quarter of 2021, up from 60 funds the year before. Tesla's return over the last 3 months has been negative 4.51. Why do analysts think Tesla will see such enormous returns in the future? To find out, keep watching. Based in Austin, Texas, Tesla is a $1 trillion market capitalization automotive electric vehicle and sustainable energy company. Tesla has returned minus 6.79% since the year's beginning for a 32% return over a 12-month period. The market was expecting earnings announcements for the prior and next quarters. Thus, shares of the EV leader were initially a little bit higher. Investors, however, find long-term objectives the most compelling. Several well-known supporters claim that Tesla should develop quickly enough to offset its high multiple. The Texas-based hedge fund Warm Capital recently released a study claiming that Wall Street research consistently undervalues Tesla due to its numerous business lines, large-scale, increasing profit profile, leadership in complex manufacturing, approach to real-world AI, vertical integration software stack, and many other factors. In a message to shareholders, the company said, according to our multi-year investigation of Tesla's production capabilities and supply chain connections, Tesla is more than 6 years ahead of any competition, and its advantage is growing. In Warm Capital's Q1 2022 investor letter, the company discussed Tesla extensively. Their largest holding, Tesla, has reportedly grown increasingly bullish over the past few months, according to the corporation. As a demonstration of their increased confidence, they increased their Tesla holdings in Q&A. They predict that Tesla will do better than the 500 overall. They confirmed that Tesla still has a minimum of 10 more years of development left. It has just now reached the stage where it can accelerate its rapid expansion, much like Amazon did when it emerged from both the financial crisis and the NASDAQ boom at the same time. They believe that mainstream growth projections for Tesla are incredibly low. Eventually, as a result of this dynamic, expectations will continue to be revised upward, creating one of the most spectacular arbitrage investment opportunities that many investors have ever seen. According to the team, incumbents and underfunded upstarts typically bear the brunt of significant industry paradigm shifts. However, it is believed that Tesla is in the Goldilocks zone, which should help them lead the electric vehicle revolution. The group said, "We anticipate Tesla shares might offer a 10 times return by 2030 and potentially much more." The hedge fund has long held the top spot in Tesla, so this isn't the first time it has adopted a bullish opinion on the stock. It's important to note that the company's lofty goals, including the $1,000 target it set for this stock 4 years ago on Seeking Alpha, have materialized. The Uber Kathy Wood of ARK Invest, who increased her price objective for Tesla to 4,600 by 2026, is the only optimistic outlook on the stock that rivals this one. In an audacious move, Woods Group set a 4-year price objective of $5,800 for the shares. Tasha Kinney, an analyst with ARK, predicts that in 2026, Tesla stock would behave more like that of a mature company than a high growth one. If the current assumptions of the model are exceeded until 2027, the price objective and compound annual rate of return will be substantially greater. See our earlier video where we discussed both of these optimistic projections in detail for additional information on this. To be honest, these two optimistic projections are predicated on industries outside of Tesla's current purview. The potential robot taxi business line is a significant contributor, accounting for 60% of the anticipated value and more than half of the expected earnings before interest, taxes, depreciation, and amortization in 2026, according to the ARK research. There were rumors that this company had already made it $1 million. In addition to offering a favorable assessment of Tesla semi-truck, Warm Capital's prognosis makes reference to AI and the Tesla bot. Similar like Robotaxis, the Semi was also supposed to be released by 2020, but hasn't happened yet. On stage, the Tesla bot has been portrayed as an actor performing a dance. Elon Musk, the CEO of Tesla, had earlier stated that a prototype will be completed in 2022, but he has since moved that timeline back to 2023. It's uncertain if a healthy dosage of skepticism is required or if bullish analysts' long-term targets are acceptable. Over the past 3 years, Tesla's production of electric vehicles has increased significantly. In 2021, 936,000 cars were delivered to consumers, an increase from 500,000 in 2020 and 368,000 in 2019. Increased delivery has led to strong revenue growth and operating leverage. In 2021, Tesla generated $53.08 billion in revenue, a 70 increase from the year before, and $5.05 billion in net income. Its first year of significant profitability. It appears to have very bright long-term potential with $5.05 billion in net income. Tesla has a 10.2 profit margin, which is expected to increase if it can continue to produce electric vehicles at its current scale while keeping supply chain costs under control. It's also anticipated that Tesla will continue to grow quickly. Analyst average revenue projections for 2023 are $106 billion, or nearly twice as much as it is currently. So is it wise to buy Tesla stock? If you think Tesla can figure out its energy and fully autonomous enterprises and grow by 10 times its yearly deliveries or more than 10 times its yearly net profits, now might be a good moment to invest. That is a challenging process that, in our opinion, significantly raises the risk associated with an investment. Let's now take out our crystal ball and make some educated guesses based on our understanding of Tesla's current position. Should Musk's second master plan come to pass, we should anticipate a rise in the energy sector, a car for every market segment, fully autonomous customers, and profitable Tesla products. It will need a lot more gigafactories to achieve these goals. Thankfully, manufacturing prices are coming down rapidly and ramping, and construction now only take a year or so. Thus, it is reasonable to assume that throughout the following 10 years, there will be at least 10 more gigafactories. Musk wants to grow the output from his gigafactories by around 50 times the current rate. And when production processes are optimized, that output will probably climb even further. Since the driver has this massive stunning screen in front of him and no longer needs to pay attention to the road, future profit margins on automotive sales should continue to rise tremendously. After fully autonomous driving is implemented, even software-like profits appear conceivable, considering the prices of robotaxi, autobidder, and an in-car app store for amusement, not to mention Tesla's rivals. We think they went into active work, albeit a little too late. Consider Volkswagen as an example. The Flakes Fargo Group said in March of this year that it would invest $7.01 billion in North America to produce battery electric vehicles, with 25 new models of electric vehicles being made accessible to consumers by 2030, the US, Mexico, and Canada. It plans to have 50% of its automobiles powered by electricity by the start of the next decade. Volkswagen is a little too late to catch up to Tesla, and while Flakes Fog is finally taking electric vehicles seriously, many other automakers are still sleeping. Sure, they have more resources to solve the issue, but in the world of technology, it's true that Tesla has a few years advantage over competitors that can't be undone with additional funding. Therefore, it's conceivable that the sleeping giants will seek to license Tesla's battery drivetrain and self-driving technology once they realize they're too late to the party and won't be able to catch up in time. Tesla has started building its own Android facility and battery production line, but even before that, they have produced a battery that will only degrade by 10 after 1,000,000 miles, at which point it may still be used for grid storage solutions until it is recycled. Additionally, it seems like Musk believes that by 2030, Tesla's energy business will have grown to the same size as its automotive section. We think that by 2030, all of these will result in a complete return of 10 tiles. Both the brand and its stock, in our opinion, will be flourishing in 2030. Where do you see Tesla? Please share your predictions in the space provided below.